and Zoom. Okay, I'm going to just join. Make sure I have a friend who's I'm going to make sure we are audible as well. Guys, if you can hear us, write into the chat. I'm going to obviously send the tweet out that we're live with Bleeding Crypto right now. And today I'm giving Bleeding Crypto full stage today because I have no idea. First of all, he has loads prepared for us, but my computer, everything, guys, Max, please save me from them. I'm just going checking on my channel now as well. If we're live. How was, you celebrated Thanksgiving before. How was that?
Your spot for choice. Just
nice. All right. So, ready for Christmas, I'm assuming. Awesome. The Santa's coming. Kids good? True. I think we're good. I think everything is working fine. There's people. Hold on a second. I'm checking. Okay, they can see us. Let us know if you can hear us, see us. Write into the chat, guys. If you have questions, when Bleeding Crypto is explaining things and you have questions for him, shoot into the chat. I'm sure he'd be very happy to respond. But I think we're just not going to delay here any longer because, I'm very interested in Europe, the World Cup, the whole family here as well. I'm sure a lot of people will be watching on our time zone, or well, suppose on everybody who's asleep might be rushing as well. And I'm going to just give it to you. So, Bleeding Crypto, and stage yours. Can you just wait, Bleeding, 2 seconds, because I think people can't hear you. Yeah, so just before you go on, I'm going to disconnect here. No, they can't hear you. 2 seconds.
Say something now.
okay, testing. Mic check.
Yeah.
Mic check. Can you guys hear me?
Yeah. So I'm sorry, I'll have to ask you to repeat that if you don't mind.
No problem again.
Perfect.
No problem at all. All right, guys. So basically, what I started off to say is that in today's episode, I want to cover some of the, and I'm not going to say misconceptions, but some of the things that people need to understand when they are trying to dollar cost average on the way down into a bottom of a market. Yes, last episode that we had, we covered the reason why I keep on insisting on 0.886 as far as the bottom, as far as a target, not really a bottom, but a target that I'm looking for towards the bottom of the market. And I go into detail on that, so I'm not going to touch on that again. So please look back into Marta's episodes and look at the last one that I did, and that explains everything. Moving forward from there, I want to talk about the what to expect inside of a market. There's been a lot of discussions on Twitter that I'm not able to elaborate since I'm only limited to 140 characters on Twitter, but I want to elaborate on the notion that people have that the moment we hit the bottom, everything's going to explode, the alts are going to go to all-time high, and we're all going to make all this money very quickly. And a lot of things that people, one of the main sayings that people tell me on Twitter is that you cannot compare to the previous 2018 bear, or you can't compare to the 2015 bear. And that is so incorrect. As an analyst, what we do is based everything is based on looking to the left of the chart to identify patterns, market structure, price action. That's how we TA. We look to the left to help us understand what to expect moving forward. That's the whole base foundation of technical analysis. The problem is when it doesn't fit people's bias, they want to now change the rules and say, oh no, you can't look to the left. But I'm a trader, but you can't look to the left. That makes zero sense. So if you're going to be a trader, first of all, you need to understand, you need to remove your bias and you need to go based on the facts. Whether those facts align with your plan or not, or with your bias or not, you cannot ignore the facts and you cannot pick and choose which facts you want to listen to. So you want to look back and look for resistance, but you don't want to look back and look at price action or historical data. It doesn't work that way. So what I want to touch on, guys, is I think one of the biggest things that people are doing, and I hear on Twitter, is their dollar cost averaging. And I'm not here to tell you that's the wrong thing to do. I'm not telling you that it's the right thing to do. What I want to do is to show you what it's going to take on your part if you want to start dollar cost averaging right now, what you are in store for. And it may not be what you think it's going to be. And it may shock a lot of people and it may upset a lot of people, and people may say, you know what, you're crazy. And the beauty of this is that in 2 years from now, you can come back and look at this video and then tell me if I'm crazy. But you can't tell me I'm crazy now. So I'm going to go ahead and look back, guys. I'm going to start off with Bitcoin. I'm going to touch on Ethereum, and I've got charts prepared. Normally, I prepare them live with you guys, but since we're limited on time, I'm going to try to do this all within an hour. I pre-prepare the charts, but I'm going to go over the summary of what I prepared. So I'm going back to the 2018 cycle, and I went down deeper. Normally, we've been looking at it on the weekly time frame, and now I'm going to zoom into the daily time frame and what to expect. And the reason I'm doing this, guys, because I want you to understand that when we're going down, guys, it isn't a straight line to the bottom, and we find the bottom, and then we start moving into a bull market. So when we lost basically the price action back on November 12th is pretty much the day that we started to heading down into new all-time lows. We were sitting at right around $6,300. When we started to fall, guys, look at the price action. As it's falling, we put in moves to the upside, 8%, 8.71%. Then we had another move here, 13.5%. Then we had another move here, 26.26%. And then we had another move here, 14.47%. Why am I showing you this? Because people have very short-term memory, and I can tell you right now, every time that we saw one of these moves, especially this one, what do you think the sentiment was, guys? Oh, guys, this is it. We reversed. We're going back. That was the bottom.
How much lower can we go? It's definitely reversed. Yeah.
There's nobody left to sell. That's my favorite saying. There's nobody left to sell. And lo and behold, we continue to fall an additional $1,200 to the downside from this 26% move. And there was others people to sell. So when we hit the bottom, guys, I want you to see the difference on the behavior of Bitcoin versus altcoins and how they behaved, and was it worth dollar cost averaging your way down? Now, when we hit the bottom here, guys, you got to think about something. This is hindsight. We didn't know this was the bottom. This could have easily went the other way and kept on going. As a matter of fact, there were a lot of people in this area here that were making some really good cases that we're going to go to $1,200 because we didn't back test a certain area, and it made a lot of sense. And you start creating doubt. But if you go look at the last week's or week before that, the episode that me and Marta had, where I showed you the level that was hit here was 0.886, same level that was hit in previous cycles, 0.886. At least if you have some sort of goal in mind, some sort of level in mind, when you hit it, you know that you are near a bottom or could be the bottom, or somewhere in that vicinity, there's going to be a bottom. So I think you're going to be better prepared than if you were to say $30,000 was the bottom, $20,000 was the bottom, when you're still so far up from your target. So again, watch those episodes so you can understand a little bit better what I'm referencing to. When we hit the bottom, guys, look at what we did. Very shortly after that, Bitcoin had a beautiful run, and Bitcoin did, the top is here, 36%. We actually did, to be fair, we did 34%, pulled back a little bit, and then we did a swing fail, and then we started to pull back here. So we did a 34% move to the upside. And this pretty much marked the bottom. Now, some of the things that I want to touch here on this video is, when we hit the bottom, did we start off on another bull run? No, we didn't, guys. We had a nice move to the upside of 34%. However, it took 108 days until we put in this candle here in April of 2019 that we started our next really, we'll call it mini bull run to the upside, which was in 2019. After hitting the bottom, the bottom in hindsight, now that we know what the bottom was December 15th, 2018, April 2nd, 2019 is when we started heading to the next major move to the upside, where we had 300 or 400% move to the upside. But the thing that I want you to understand, guys, is 108 days. I want that to register, because here's what happens. In Twitter, when we don't move for a week, people are losing their shit.
Yeah.
So you have to think of the mindset. You were dollar cost averaging all the way down, and everyone is falling into the same mindset. I'm dollar cost averaging because I'm thinking of all-time high. I'm thinking of, $20,000. When we get to $20,000, oh my God, this is going to be amazing. I'm buying it at 5,000, at 4,000, at 3,000 for that goal. And yet it took 108 days just to start moving back up into, and as you know now, it wasn't even all-time high. We were on the road there, and we topped out at 14,000. Now I want to talk about something else as well. I want to talk about this area here. We bottomed out at $3,200, and for people that think, oh man, we'll never see that again. Look at this, guys. Look at this date range. From the time we hit the bottom to the COVID low, $454. Now, the COVID low, guys, keep something in mind, was only 23% higher than the actual bottom. That's not much. But the point is, 454 days later, we got really close to the bottom. And here's something that I think a lot of you are going to say, oh, that was a black swan. There's no way of knowing that we could have dropped. Guys, if you look back to the left, there's always a reason why we drop. Same exact thing in 2018. We went from 20,000 to 3,200 bucks. Nobody thought, and there's always a reason. It's called a market cycle. It doesn't apply to just crypto. It applies to everything in broader markets. If you look at broader markets and you study, everything goes through a cycle. It has a low, it has a high, it peaks, it comes back down, it retraces, the next cycle continues. The difference that we have in crypto, the advantage I like to call it, is that we have it in very much shorter intervals than in broader markets, where their cycles are 10 to 12 years. Ours are usually 2 years for bull, 2 years for bear, so forth and so on. So we're able to make a greater amount of money, in my opinion, because we have a shorter time frame to work with. And if we utilize the time in a bear market to understand how cycles work, we can maximize the very next cycle when it comes again. And if we miss that one, guess what? We just have to wait 2 more years after that, and you get to try again until you get it right. The purpose that me and Marta have for this show is to help you during this cycle to get it right. We don't want you to make the mistakes on the upcoming cycle and then learn from the mistakes and have to wait another 4 years before the next cycle starts, the next bear cycle finishes. We want you to try to help you to maximize those returns now. So here, guys, going back to what I was saying, we had 454 days till the next time you had a chance to buy in the $3,000 range.
But
now, before that,
that was the point as well, that it happened because we were saying that those prices never come back. But this is what
yes, They do come back. They do come back. And from the all-time low, guys, to the all-time high, it was a 346% move to the upside. Great return on the money. Great return on your money. The problem is this, guys. You look at this, and people say, now when they're looking back, I'm going to make so much money on the next cycle when we start doing this. Here's the problem, guys. Most people don't. They don't, because they fail to take profit. They don't know how to take profit correctly. They don't know what to do with that profit. They don't know what to do with what they leave inside, or how to take partial profit. They don't know how to do any of that. All they think about is, I'm going to buy low and I'm going to sell high. But very rarely does anybody ever sell high or even sell at all. And this, again, it comes down to discipline. It comes down to what are you gleaning from this bear season? How are you learning? How are you going to improve and not make the mistakes that these people made? Do you think that everybody who bought here sold here? Most people who bought here held through this whole entire thing and were left with nothing, guys. They were basically went back to zero. It was they were millionaires for a brief time. They were internet millionaires because it was all magic money. Until you pull that money out, it's magic internet money. It's not real. And they went right back down into the same levels that Bitcoin was back in September of 2017. So we now move into this run. Now, when you look at this run, guys, I'm going to show them something real quick. This is really cool to see. When you look at fibs, and you guys know how much I love fibs. I'm going to show you something. When you take the low of this market here, and you put up here to the high, look at where we hit, guys. 618. Golden pocket. So we came down, we retraced, we came back down, and look at this beautiful hit of 618. It's one of those things, guys, that I love the Fibonacci because it's such a useful tool. And this fib study is from last week's show, where we went from the bottom, the low to the high, we retraced right to 618. And as a matter of fact, you know what we did? We didn't even stop at 618. We kept on going. But we hit the level that I usually like to see respected, 0.618. But again, go back to that study of last week's episode to get a little bit more information on that. This is not really applicable to here.
And if I just may, because I want to make a note about the technical analysis and the whole Black Swan event, where we are saying that, well, it's a Black Swan event, and you made that point at the start of. So I just want to bring it back again, that despite of us not being able to predict it, we had this confluence and this data that we had an idea that, right, this might go back to that level. We don't know why yet. So whether the Black Swan event happens or not, whether it is a very sudden capitulation or it isn't, I think important thing to remember is that those levels really are key levels, and to keep them in mind, regardless if you're planning for, you can't plan for a Black Swan event, but you're planning for a level, you're planning on a technical analysis.
Do you remember the first time you and I met, Marta? It was on the Wendy O show. It was me, you, Wendy O, Fieras, and one other gentleman, and we were. That's where you and I first met. It was, I believe, it was February or April of this year. Okay, and this is where I went and told you guys. This is the first time that Marta had heard the 886, because I went over my analysis and what I was thinking. We were at close to 50,000, guys. We were in the high $40,000, $50,000 range, and I was already talking about an $11,000 retrace. And I'm sure a lot of people who heard that show were like, this guy is out of his mind.
They didn't
this guy is out of his mind. They're like, that's very unlikely it's going to happen. And look, here we are. And I'm not saying that I was a genius and called it. No, I'm not a genius. The only thing I know how to do really good is learn from my mistakes. I learned to look to the left. I learned to analyze markets. I learned to remove my bias, understand how market cycles work, understand that market makers are here to take our money. They're here to design, to wear us down, to make us make irrational decisions.
Absolutely.
And basically take as much money as possible. Me and Marta are here to help you to not give them so much of your money, to keep most of your money, and how to take profit along the way. As a matter of fact, that is, I'm going to do a little shameless plug on my Discord. That's what my Discord is about, guys. Wow. My Discord is about, I'm literally hammering to my guys how to take profit. We go over setups, we go over the markets, and it's a constant battle, guys, to train people to take profit. Absolutely. You think it's easy. You want to give people money, but they don't want to take it. Most people don't want to take it, but it takes a lot of time and effort. Think about this, guys. Think about Muhammad Ali, one of the best boxers in history, okay? He became the champion. Once he became the champion, why did he continue to train before every fight? If he's a champion and he knows everything, why did he continue to train? Well, what's the purpose? He knows it all, because that's what you need to do. It's human nature. You want to get better. You want to stay consistent. You want to stay on top. You need to train. You need to go over it. Just because you know how to read technical analysis doesn't mean that's it. I just throw my hands up. I put buys and sells and I'm a genius and that's it. I'm going to make all this money. It doesn't work that way. You have to constantly train your brain. Muscle memory is what we try to instill. Marta, I'm sure, does the same thing with her group. I do the same thing with my group, and that's the importance of being in a like-minded community. So I want to move on to one quick thing here, guys. From the top, and I want you guys to measure something, guys. From the bottom of the market. So this is going to go to people who want a dollar cost average. These are the people who dollar cost average from, let's say, $19,000 all the way down to $3,100. How long did it take for us to actually see all-time high? I want you to see this, guys. It took us 1,058 days. Wow. 1,058 days. Now imagine, because unfortunately, Marta, I've heard this on Twitter before from several people. They wrote this down, guys. They had the diamond hands or the hodl, whatever you want to call it, and now they're writing it all the way back down again. 1,058 days didn't teach them anything. They never took profit. They didn't know how to take profit. They didn't know when to take profit, and they held. We have an opportunity now, guys, that we're approaching the bottom of the market.
How does that make you feel, guys? Anybody in the chat, guys, give us some feedback.
Yes, absolutely. Now, this analysis, guys, goes to show when you buy Bitcoin, how quickly, let me zoom in, how quickly you start making return on your investment, and how quickly, even right after the COVID low, look at the COVID low, guys. Look at the bounce off the COVID low. We immediately started to move up. Now, I'm going to show you guys, do you think your alts immediately followed Bitcoin? Do you think your alts immediately went into the bull market? Look, you can't deny that the COVID low that day, that week, that was it. That was the beginning of Bitcoin's bull run, not the market. Not the market. And this is what I want to show you, because I want people to realize, when you dollar cost average, guys, do you know how long you're going to have to wait on your favorite coin, your Sol, DOT, Aave, FTM, Matic, all those coins that everyone can stop buying right now? Do you understand what you're going to have to sacrifice in order to wait to see that next bull run? And this is what I want to talk about. So I'm going to do this, guys. I went back to CoinMarketCap and I went to historical snapshots. And I basically took December 24th, which is before, obviously when we're at the peak of the bull market. And I went and looked at the top 10, just to see how did the top 10 coins react to the drop of Bitcoin. When did they hit their lows in relation to Bitcoin, and when they started to go back up to all-time high in relations to Bitcoin? And you guys all know that I'm not a Bitcoin maxi at all, but I want you to see what Bitcoin is capable of doing compared to the alts, and you can make that decision if you want to hedge your portfolio with maybe 50% of my portfolio in Bitcoin and the other 50% in everything else, or you want to keep 10%. That's all up to you and your trading plan. I just want to give you the facts and let you know, and then you can decide from there. So here's Ethereum that I already have prepared. Ethereum back in 2019 did very some. I have some notes here that I want to just go over real quick. So Ethereum dropped on November 13th. And it found the bottom just like Bitcoin on December 15th. So that's this drop right in here. And as a matter of fact, I'm going to leave it on the day. I'm going to leave it on the weekly, just a little bit cleaner chart. So we came down, put in a low right here. The very next week, when Bitcoin started to move and did that 34% bounce, look what Ethereum did. Ethereum did 100% compared to Bitcoin's 34%. It retraced just like everything else. As a matter of fact, you know what? This is one thing I didn't do. I want to see something here. What did it retrace to? It retraced down to, you know what? Let me take off the magnet. It retraced right into 786. Okay, it returned to 786, a Fibonacci level. Then she went and put in another run, which this is Bitcoin's run to the top of 2019, where Bitcoin went up. What was that? It did 346%. Ethereum did a little less, 252% to that peak here on 2019, before basically coming all the way back down and retracing. And again, let's do this. I'm going to put the fib level on each one because I think it's important that people understand the relationship between price action and fibs and how important they are and why I utilize them. Look, we went right into 886, and guess what? We actually pierced it. We gave it almost all back. This was probably about a 93% move drawdown. You know what, guys? The drawdown from 2017 to this was 94%. I'm pretty sure this is very close. So that establishes a pattern, guys. Remember, when we're an analyst, we're looking for all of that information. What does it normally retrace to? What does it normally move? How does it normally come back into? 94%. And this is probably, again, it's probably going to be right about 90, right in that high and low 90s percentile as a retracement. Then she put in a beautiful move to the upside, which everything came down with the COVID low. But did Ethereum move with Bitcoin? Did Ethereum start its run up with Bitcoin? Guess what, guys? It did. It put in 182% move, consolidated, put 110% move, did a little bit of consolidation, retracement, and then she took off. So very, very similar. The only difference between Ethereum and Bitcoin is that Ethereum put a much higher ROI. And if you ever have time to go back to study it, from the beginning of Ethereum has always done better in ROI against Bitcoin. Never has it failed yet. Could this time be different? Who knows? But it hasn't yet. So that's Ethereum. So now you have two major coins, guys, to think about in your portfolio: Bitcoin and Ethereum. And is Bitcoin and Ethereum, are my shitcoins still better than Bitcoin and Ethereum? Let's go look at the top historical top 10 coins. We have the next one is Bitcoin Cash. Bitcoin Cash, quick summary, actually was very impressive. I didn't until I prepared for this, I didn't realize how well Bitcoin Cash actually did. When Bitcoin Cash found the bottom, it put a 21% candle on the following week. Did phenomenal. Actually came back down to 886 on here. Then it took 112 days for it to start moving in April. But here's the thing, guys. You look at this 221%, and this might get you excited because you think that your shitcoin is going to do that. And guess what? Your shitcoin is going to probably going to do that. But here's the thing. Think about the mindset, and you have to be honest with yourselves, guys. If you really want to take something out of this lesson, you have to be honest with yourself. Do you think people took profit here?
Are you going to sell?
Yeah, exactly. And here's the thing: Bitcoin Cash had a high of $1,843 here. Now we're talking about Bitcoin Cash down here in the $156 range. You see it doing 100%. And I can tell you right now, 99.9% of the people were not thinking of a 200%. They don't want 200%. You know what they want? They want this. They want 1,800%. Everybody is going to be convinced here that we're going back to all-time high. Yeah. Why the hell would I sell? Because again, remember, nobody wants to sell. They will find every excuse. And the main one is, nope, we're going to go to all-time high. Nope, we're going to go to all-time high. So it's pretty reasonable to say that nobody sold here. Everybody pretty much rode it all the way back down. And it took 112 days. And yet again, guys, when we start moving up, I remember the sentiment back then, guys. I was in Bitcoin Cash. I remember that. We all thought we were going back to 1,800 bucks and above. And what did she do? She went to 518 bucks. Now look at this, guy. I put more information on the screen.
That's weeks, by the way. This is a weekly chart.
Yeah, this is a weekly chart. She gave it all back. Another beautiful run, gave it all back and then some. And then it took, after that, it took another 210 days before we started seeing a little bit of an incline back up as the next bull run commenced. So you think about this, the people who were dollar cost averaging with the mindset of all-time high, and that's what most people do. They don't sell because until they set all-time high number, it took them 665 days before they start seeing the market move up. Do you think about yourselves, guys, do you think you would have had the fortitude to wait 665 days seeing all of this price action and you were going to hold this entire time to all-time high? And guess what happened here? Look at this. It took, let me show you something real quick. Actually, it wasn't 1,800. I'm sorry, I looked at the wrong data. I said it was 1,834. No, the all-time high was actually, I'm sorry, all-time high was 4,300. 4,300. So that, again, that even strengthens my argument. You guys weren't thinking of 1,800. You guys were thinking of 4,300. There's no way in hell you were going to sell at $156 when you're thinking of 4,300 bucks. But overall, look at this. Look at the fib. Again, we're going to do from all-time low to all-time high, 382 right here. We didn't even make it to the golden pocket. We went right to 382, gave it all back, and never recovered. And Bitcoin Cash was going to be, what is this? It had a better protocol than, I don't even know the technology. I mean, the FA behind it, guys. But there's so many arguments that Bitcoin Cash was gonna overtake Bitcoin. It was the real Bitcoin. And look, at the end of the day, no, it wasn't. And it just withered away, and it's not doing really pretty much anything. Didn't even make it past 382 on that move back to the couldn't even make it a 618. And it was number three against Bitcoin and couldn't do it. And XRP, everybody's favorite. We have to touch on XRP because everybody's loved. Everybody who wants smartest show is an XRP fan. So, and there's nothing wrong with it, guys. There's absolutely nothing wrong with it. Like I said, I'm a US dollar fan, so I want money. I do this for one reason only, is to make money. I can care less which one wins. As long as it makes me money. So XRP, I got my notes here. XRP had started to drop on 11/13, and then it did a 60. Okay, right here. So right here. Oh, this is something really interesting, Marta. I don't know if you knew this. Prior to dropping here, guys, on the 13th of November, XRP did 213% weeks prior to the last capitulation. So that a lot of people got caught up in here, guys. You see this wick? A lot of people got caught up at 75 cents. A ton of people. And think about how long it took for those people just to break even. 2020. So it took 2 years to break even. It took 798 days. Oh, nice. 798 days. Again, those who are thinking that dollar cost averaging to all-time high is a good idea. I'm not saying it's not a good idea. All I'm saying is, are you prepared to hold 800 plus days to see that all-time high or that level where you bought? Because all-time high for XRP was actually $3.30, and we never made it. We never made it up to all-time high. So imagine you are a swing trader, you're an investor, you don't look at the charts like we do. You bought it and you said, I'm putting my sell order at $3.30. That's all-time high. You're still sitting on that order today because it did not make it there. Where did it make it? Let's look at the fib real quick here. I just want to train you guys to use the fib. So I like using the fib. Boom. hold on. Sorry about that. Let me get rid of this. Let me pick up the
I'll read your notes, guys, and your questions in a second.
Right here. We hit the, we actually got real close to 618 right here. Look, there's that wick right to 618, golden pocket, great. And she never went to all-time high. As you know, we just basically went right back to 38 cents, same price she was in 2018. That's harsh. That is harsh. So the same price we were in 2018 right here on this, on actually August of 2018, she's at the exact same price as she was back then. So you would actually be holding, guys. And I'm not trying to make anybody feel bad. I want you to see the reality of it. If you were holding for all-time high, you have now been holding for 1,547 days
shocking
on that sell order, and you still haven't. You don't have an all-time high in sight anytime soon, in my opinion. So again, this is about understanding when you are buying to dollar cost average, do you have the willpower to hold that on there? LTC did phenomenal, guys. LTC actually did, in my opinion, well, not in my opinion, the facts show it, did better than Ethereum. LTC did better than Ethereum. LTC, the moment that LTC bottomed, and this is something I didn't even know it did that well until I did the study earlier today. Since it bottomed, it went on a run. It did 556%. It did better than Bitcoin and Ethereum. Actually, it did the equivalent of what Ethereum and Bitcoin did combined in just this coin alone. So it did phenomenal, but was able to hold it. It wasn't, guys. And here's something that I wanted to point out that's interesting. If you bought the low if you bought the low here of $22.25 for Litecoin in 546 days, it touched it 3 times. You were able to buy it back then again at that price. 1, 2, 3.
And can I just stop you there for a second?
Yes.
Because
yes.
Robert has asked me a question here, and I think a lot of people will, at this point, this is very good example. When you sell, how do you get back in? I know it's impossible to know for the future that it's going to hit it back again the same price 3 times, but
okay, that is a very good question, and this is a strategy that I teach my students in my Discord, and it's not a one-liner, guys. It's not something I can just give you a magic answer and say, okay, all you have to do is this, and you'll be like, oh, okay, great, I'm a genius now. It doesn't work that way, guys. There is so much information that to unpack on that question that I don't have the time in this YouTube video. But I will say, if you think that I'm full of crap, I've got 321 students of mine in my Discord. Most of them are watching. Most of them are going to watch this video, and they can easily, none of them are going to lie for me. And they can easily say, yeah, he does have a system on how to take profit, how to maximize your profit. Is it going to be the same ROI as selling the bottom and selling the very top? No, but I'm not here to do that. I'm not here to buy the very bottom and sell the very top. I'm here to get the meat in between. I'm here to get my money back as soon as possible and ride the next level, get some more profit, let it ride, because there's a system that I teach my Discord in my Discord that allows you to continue to take profit because you never know when that top's going to be. Put it this way. If you are playing in the mindset that you are going to buy Bitcoin now and you're going to sell it at 69,000, Bitcoin can easily go 200, 300, 500,000. We don't know what's in store for Bitcoin. So if you were to sell at 69,000, you think you're a genius because you just made 800% return on your investment, and you look at the news, you look at your friends, and Bitcoin's 250. You think you're going to be able to live with that? You're not. And you know what you're going to end up doing? You're going to end up giving those profits back. So imagine a system where you continue to take on profit, continue to have skin in the game. There's a process to doing that. And again, it's not a one-liner that I can just tell you what to do. It's an entire way of thinking that you need to train your brain to do. And that is what I like to teach in my Discord. But Robert, there is a way to do that. You just have to put the time. Again, a lot of people, unfortunately, they go to crypto Twitter thinking that everybody has the answers. I'm just going to follow that. I'm not going to take the time to study. I'm just going to do what they do, and I'm going to make so much money.
And what I absolutely hate about crypto Twitter is the hype that is being created by so many accounts that basically show that, look, this coin, I bought it here and it's done 100x. And they make everybody believe that they have made 100x. Most likely, they've already sold their bags before they've ever seen 100x. Or this is literally just used for clout, for basically getting attention. But there isn't, in any scenario here that we're discussing, whether it's one of the top 10 coins or small caps, looking at this, it's absolutely impossible for a person, unless they went into a coma at the exact time when they bought and they woke up when it hit the all-time high and decided to sell. Sorry. The best approach to this is dollar cost averaging on the way down and selling when you see your profit and your investment returned. At least the rest is free money. And you're talking about teaching that scenario. But what I absolutely despise is this hype and this sort of mentality that you have to buy super low and you are going to hold until that coin may never, and we've seen it with Bitcoin Cash, it never even remotely went near all-time high. Looking at all the historical data, it shows you that you will need a lot of patience, but you're going to miss out on so many situations where you could potentially 556 here right now, 135, 204. You're not going to catch the 566. You're not going to catch 135 next time it does that. But if you take profit as it moves to the highs, you're making money. And that's what it's about. It's not about making that 100x.
I'm going to play devil's advocate for just 1 second, and I'm going to give you a statement that I want you to take with a grain of salt. I don't want you to again, I don't want to say that dollar cost averaging is wrong. It isn't wrong. It's a method that you can use, but hear me out on something. Dollar cost average can also be very, very dangerous, and it could backfire on you. And here's how it can backfire on you. You start dollar cost averaging up here, guys. Imagine you start dollar cost averaging all the way up here as it's going down. If Litecoin top is $375 and your dollar cost averaging down here, there's going to be a point where you're going to stop. You're going to say, you know what, I've had enough. It doesn't stop going. I'm going to stop. What's to say that your average isn't going to be higher than $146? So it takes you a much longer time just to break even. Because if you dollar cost average up here and you stopped here because it wouldn't stop bleeding, you're not going to be at $146. You're probably going to be somewhere up in here. So that means that it took you probably 2.5, 3 years just to break even. So even though dollar cost averaging is not bad to do, you have to understand that there is a system to dollar cost averaging, and that system is going to be predicated on how much money you actually have. And I did an example not so long ago on one of the shows here where I showed if you bought one Bitcoin at $50,000, and you bought 2 more Bitcoin down at the bottom, say at 15,000, your average goes down to 27,000. But that's assuming that you're using the same dollar amount, guys. Remember, you have to use the same dollar amount, and you have to have money for that. Because if you have $50,000 to spend and you got to buy 2 more at 15,000, that's another additional $30,000. Do you have that money to do that? Same thing applies here. If your budget was 10 grand and you dollar cost average of 10 grand up here, and you have no more money to buy down here, you're not going to average here. You're going to average somewhere up in here. So you have to be prepared to hold. So when you dollar cost average, guys, I'm not a big fan of again, you don't know in hindsight, but when I'm going to dollar cost average, again, this is why I use 886. I'm not going to dollar cost average at 382. I'm not going to dollar cost average at the 0.50. I'm not even going to start dollar cost averaging at the 618, the golden pocket. Why? Because never in the history of Bitcoin on any bull run it's had has it ever went down to the 618 on that retracement. It's always gone down below it. So I'm going to start dollar cost averaging towards the bottom, 786, 886, and anything below that, what I consider what I like to call stink bids, I will place under there. That to me is how you dollar cost average. The location in where you start to dollar cost average makes a very big difference into what your average price is going to be. Because again, you need that money to lower what you bought on top. And obviously what you bought on top is going to be more expensive. So you're going to have to match it down here. And unfortunately, not a lot of people have those funds to match it. Yeah. So please be careful with dollar cost averaging isn't the answer to everything. It's a good strategy. But there is things that you have to understand. And that's why joining a community like Marta's, joining a community like the one I have on Discord helps you to understand that. You have a community. It's not just me, guys. I have a community of tons of members that are experienced, that are going to help you and mold you to give you the insight that you need to make your own decisions. And that is the premise of all the communities. And there's a lot of good ones out there. There's Castillo Trading. There's Nebraska. There's Cobra. King Cobra, Cobra, I forgot his exact tag. Cobra, I actually tagged him in a tweet not too long ago, a couple of days ago, that I put on there for people that I like to look up to. So there's a lot of communities. I'm not here to shill mine and tell you to come join mine. You don't have to. If you can't relate to what I tell you, find somebody that you relate to. If you relate to Marta, join her. If you like the way she thinks, and you like the tools that she uses, you can understand what she explains to you. You have to join those communities so you can get better. Just because you hear an answer, like if I were to answer Robert's question with the one-liner, that's not going to help him at all. There's so much information that you need to understand before you even take a trade that you can't answer it in one sentence. It takes too much time. You know what? I'm not going to go through the other coins, guys. So we're kind of pressed for time. I do want to do something that I thought was really neat. I pulled up. You saw how I pulled up the historical data, right, guys? Mm-hmm. Look at this, guys. I'm going to move the current today's market, and we're going to compare. And this is not to knock down your coin, guys. This is to give you a perspective. Thank you. Perspective to the people who like to marry the projects and think that their project is going to be number one. It's always going to be the top. Well, let's look. Back in 2017, number two was Ethereum. Now, number two, okay, it's still Ethereum. Back then, Bitcoin Cash was number 3. Bitcoin Cash today.
I think you passed it.
I did?
I think so.
No, I don't think I did. That was Bitcoin SV. Bitcoin SV 55. Did I pass it?
I think you did.
I'm sorry. 21. It's 21. Bitcoin Cash. They changed the from yellow to green. That's why. 21. So it went from number 3 to 21. Now let's look at number real quick. Well, XRP was number 4. XRP is still in the top 10 though, at number 7. So great job on XRP, I think. Litecoin was number 5 back then. Where's Litecoin now? Number 17. Number 17 from 5. Cardano was number 6. What's Cardano at now?
6. Still 6.
Still 6. Oh, wait, wow. Okay, did very well. So Cardano did very well, guys. And it's funny because I hear so many bad things about Cardano. And look, it's held up from 2017. It's still at the same spot. IOTA, number 7. Where's IOTA now? And I remember hearing so many things about IOTA, how it was an amazing protocol and this, and it's number 50, guys. 50. Think about this, guys, and I'm going to touch on this for a second because I remember IOTA people would not stop talking about IOTA, and all the people that listened to all those cartoon characters on Twitter, all the avatars telling how IOTA is the best. And most people, when they go on a coin, guys, you know what they do? They don't put 10%. They don't put 5%. They put 100% of their bag. Imagine that, guys. You put 100% of the back because everyone on Twitter is talking about it, and they must know more than you because they have 100,000 followers. I'm going to go all in. It's number 50, and it never recovered. Now, let's go look at the next one. Let's look at NEM, XEM. Where's NEM in comparison to today's market?
I don't think I even ever heard of it.
Wow. This thing is, Jesus, no, I don't think it could be that far down. I think it might have just went, it's not even in the top 100, so I'm not even going to bother. Yeah, it's not. Wow. So it just basically went away. It went, who knows? I don't know if it went away, but it's not even in the top 100. I'm not even going to worry about it. Look, guys, it was $9.3 billion market cap. It was right up there with IOTA, Cardano, close to Litecoin. And look, it's not even in the top 100. Dash was one that everybody, it was a new payment system. People are using it all over the world. It's going to be it's going to replace. Well, did it really? What is it doing now? Where is it now? Where is Dash? Damn, did it go down that far? No, I had missed it. I can't believe it. It couldn't have bled that much.
Come on now.
Let me see here. Polygon, Argon, Xfinity, Stellar, Cosmos, Theta. Holy shit, you know what? I'm going to do a search for it. Damn. No, it couldn't have gone. There's no way. But I'm sure it's not. Where is it? It's number 72. That's where it was. Oh, it was 72, guys. So let's scroll back down. Damn. There it is right there. 72. So it goes to show you guys the next, I think they were using this in Venezuela, in Brazil. None of that shit mattered. None of it mattered. You know why it didn't matter, guys? Because I told you this and I keep on telling this over and over again. Better, faster, cheaper. That's technology, guys. So all the coins that you look at right here, the majority of these coins in today's market that you guys love so much, the Polygons, DOT, DAI, Tron, Sol, AVAX, all of this stuff, guys, do you think there isn't a teams of hundreds of developers, smart people, developing the faster, better, cheaper?
Yeah.
Poly, DOT, LTC, TR. That's technology. It always advances. It doesn't just stay stagnant. Again, do you guys still have your iPhone 6? Because the iPhone 6 was the best phone on its time. Nobody has it, but it was the best phone back then. It doesn't mean it's going to be the best phone right now. So just please keep that in mind. I'm not telling you this to knock your coin, guys. I'm not telling you that. I'm telling you this to have a reasonable percentage of your portfolio inside of these coins. I'm not telling you not to buy it. Go ahead, buy it, because they may be like a Cardano that survived and continues to hold the number 6 spot. But what if it isn't? How much of your portfolio is going to get affected if it isn't? Are you going to have money to buy the new Cardano or the new Tron or the new DOT or Aave? Will you have money left over to do that? And that is what a trading plan involves. And trading plans.
What I just want to say as well is this isn't what we're not saying this to inflict more fear or make you absolutely scared of what's coming or what. It's the exact opposite, to prepare yourself and to learn to control that fear, because it's always going to be there among uncertainty and greed. So when it comes to money, every successful trader will tell you removing emotions out of trading is the key. You don't feel remotely attached to it. You don't feel emotional when you see it go up or you see it go down, because you have prepared yourself for all those scenarios and you have basically assumed levels where you're going to either buy or sell, and where you've allowed yourself to have a certain amount lost and you're cutting your losses. And there isn't more involved rather than clear numbers and clear levels. So we're not telling you this to, absolutely freak you out and say, look, guys, you've been dollar cost averaging, you've been duped and you're going to be holding for the rest of your life. You'll never see your money again. We're telling you this right now because it's going to give you the best chance to prepare yourself and best chance to make make those returns on your investment. You might have to take, the hard road and say, I'm going to say goodbye to certain bags, whatever, but that's part of the game as well. I don't think there's a trader out there that haven't lost money, and it just is a part of the game, part of the equation, but it's to detach yourself mentally and emotionally from those losses. And we're not even saying to you right now that, trading is better than investing, but it's to have a plan, a clear plan, whichever path you're taking, and to prepare yourself and grab that. If you see any returns, grab them and hold on to them as a reward for your hard work.
Let me leave you with something that Marta just said about greed, and that is the most amazing part of crypto Twitter, of being inside of crypto, that people have the hardest time overcoming. Think about this, guys. We can't force people to take profit. Nobody ever wants to take profit. And this is how ridiculous taking profit in crypto. This is an analogy that I want to use that it sounds stupid, but it describes most people in crypto are this way. You're walking down the street, guys, and you see a stack of cash. You see $10,000 laying on the ground. Every single person in here would pick it up and put it in their pocket, or either at least put it in their pocket and say, okay, I'm either going to keep it, or I'm going to find out who the owner is, or I'm going to turn it into the cops. You fall into one of those three categories. Most of us, I think I would keep it. Fuck it. But anyways, but here's crypto Twitter. This is crypto. You see $10,000 in the street and you say, oh my God, there's $10,000. You look down the street and you say, you know what? If there's $10,000 here, I bet there'd be more money over there. I'm going to leave that on here, and I'm going to walk down the street, and I'm going to see if I can find another 10,000. And guess what? You walk down the street and you find $20,000. And you're like, oh my God, it's $20,000. But what do? Do you pick it up? Not crypto Twitter. You know what crypto Twitter does? I didn't pick up the 10, and then I came to 20. That means there's got to be 50 over there. I'm going to walk to the next block, and I'm going to pick up $50,000 over there. And guess what? You get to the end of the block, and there is no 50,000. You look back, somebody already took the 20. You look further back, somebody already took the 10,000, and now you're left with nothing because you had too much greed. You don't want to pick up the 10. You don't want to pick up the 20. You were trying to press your luck and try to go for that $50,000 that was never there, and now you have nothing left. And that, unfortunately, is what people do trading. They will have X amount of dollars in profit. They don't want to take it. And it doubles, they don't want to take it. It triples, they don't want to take it. They cannot take profit. And market makers, guys, will move markets to highs that you can't even think of. And no market maker is worried about having to pay you because you are your own worst enemy. They know no matter how high they take the market, you most likely, 90% of people will not take profit. They're gonna bait you to put your money in, and they're gonna take your profit. You're gonna leave your own profit for them, and they don't even have to fight. They don't have to trick you. They don't have to do nothing. They just have to rely on your own greed. That's it.
Patriot Power here, he's made a great comment. Once you realize USD is the main thing to accumulate, trading becomes much more simple. Have an addiction to US dollar, not your crypto bags. And in hindsight, I know a lot of people want to accumulate as much as possible in terms of either pips or coins, and they think in those terms. But personally, I'm here for money, and I cannot say no to the dollar. I want to see my returns, and I want to use it in the real world. Who knows, maybe one day we're going to be, I don't think it's going to be a case of, I was on a Spaces there just before I hopped on, and I don't think people are going to be going around with Bitcoin instead of dollars in their pockets in 10, 20 years' times. There isn't going to be a person with $100 worth of Bitcoin going, I'm going shopping, that kind of way. I think that currency obviously is here to stay, but it's not going to totally and utterly, repress and replace.
I want to offer all the listeners something here, and if I may, again, it's a little shameless plug, Marta, but I want to offer you guys something. I'm going to give Marta a link to put in the description of the video below, and it's going to be a link to a referral link to BINGX. It's an exchange that I'm affiliated with, that I started using. Great liquidity, very ease of use. If you guys sign up with my link, I will do a one-on-one, just like I'm doing right now on Zoom with Marta. I will give you guys a one-on-one session with you guys to help you either understand something that you are having trouble with, or even help you at least give you the foundations of starting a trading plan or how to take profit. Like Robert needed help how to take profit. I can do that on a one-on-one with more time, without a limited time. I can sit there and help you to do that. And all I ask for you guys to do is click on that referral link, use my link, and awesome. I will, once you send me a UID number, I will verify it with Bing, and I will send you over a link, with a Zoom link when it's convenient for you and convenient for me. We'll find a time, and I will help you one-on-one. It won't cost you anything other than just to sign up using my referral link. So if I can send that over to you, Marta, after the show, so you can put it into the YouTube, I'd appreciate it. And again, I do this, guys, because I'm here to make money, guys. I'm here to make money any way I can. Bing pays me for that. So I'm going to utilize it. I'm going to take look, guys, I'm 50 years old. I come from a generation where we're not too proud to pick up a broom sweep to make money. I don't care how much money I make. If there's an opportunity to make money, I'm there. I'll put up some overalls. I'll start sweeping. You want to pay me $50 to sweep your step shop? I'll do it right now real quick. I'll be the best sweeper you'll ever see. That's the kind of generation I'm in. I never feel too proud because I can make this much money trading that I can't do that. That's too low for me. Not at all. I'm here to make money. The more money I can make, it's the more money I get to put in the market, the more money I make. That's how I see things, guys. I see everything in percentages. That's why I have a hard time. My family makes fun of me, Marta. I have a hard time when I go out to stores or to restaurants or any place. When I leave the house, I leave with my own bottles of water because I refuse to pay $2 for a 10-cent bottle of water that I buy at Costco. My entire family makes so much fun of me. And I don't care. I don't care. I'm not giving you a 2,000% ROI. It's not going to happen.
Yeah, no, it's absolutely shocking. I mean, honestly, I wouldn't laugh. I'd probably do the same. Just something as well, what we were just talking about, because we did made some comments about crypto Twitter. I just think, like with everything, guys, you need to use your own discretion, and it's a brilliant platform, don't get me wrong, and every social media platform has its cons and pros. With crypto Twitter, it's such a bubble. People, you know, they tend to do certain things. Obviously it's all driven either by their own ego or their own motives, whatever. It's still an amazing place to go and find fantastic alpha and share that experience and learn. You just need to learn to filter the accounts that are there to genuinely help you, or they're there only to help themselves and grow clout on no merit. So we're not shading, again, we're not shading investing, we're not shading trading, we're not shading other people on crypto Twitter. Use your own, whatever, you know, whatever suits you, what you like. Bleeding Crypto was saying earlier, if I speak to you, I'd be happy to, you know, welcome you in my community. I always reply. And Robert, he's here in the stream. He's made comments, and he knows, he's been following me for a long time. I'm sure there's other people here that can confirm that. If I speak to you, I have Telegram. I respond to all of my comments, all of my DMs. I do what I can to help. This is another reason why I'm doing this on YouTube with Bleeding Crypto, to help. It's an amazing opportunity to meet other traders, to meet other investors, learn from their perspective, and gain something for yourself. So I really hope this is it's cleared up a little bit. We have our own opinions, and we obviously feel strongly about certain things, and you have to laugh at certain absolute ridiculous statements or tweets that you read. But they're still there to kind of open your eyes and, you know, give you a different perspective, and you can then judge and make a decision and be like, that was ridiculous. Or actually, you know what, I'll go back to it. Learn from like-minded people, but learn from people that have completely opposite opinions to you as well.
Marta, do you ever follow the CME gaps?
Sometimes, yeah, I think they're
okay.
Yeah.
Check this out, guys. For those who are listening,
when
again,
I see them,
I'm going to go back. I'm going to go back to what an analyst does. Analyst looks back at patterns and to get the highest probability. The CME gap, guys, has a 95% fill rate. Think about that, 95% fill rate. And just I'm not trying to scare somebody. I'm just trying to let you know, CME gap, guys, they have gaps at 11,175. This is actually going to look right here. 11,265, excuse me, inside of there. There's another big gap at 90, right in the 90, high 9,000. Another one at 7,600, and all the way one down here like at 3,600. So these are the gaps that are there with a 95% probability of filling, meaning that maybe this one doesn't get filled, or maybe this one doesn't get filled, and maybe the probability one day will go down to 80%. But so far, it's got a 95% success rate. So it's just something, again, you want to keep a clear picture, guys. You don't think I get FOMO? Of course I get excited. When I see days that we're doing 20%, I'm like, oh my God, this is awesome. This is great, because we follow the market on a daily basis. It's hard not to, but I personally have to constantly remind myself the bigger picture, zoom out. How do we look? How does things look? As a matter of fact, here's one. I made a comment to one of my guys in my Discord today. You look at the 1 hour on Bitcoin when we're putting in this candle. Check this out, guys. So we're putting in this candle right here. Let me just turn everything off. We're putting in this candle right here. She's going up. This was green when I made a comment. It looked like, oh my God, it looks like they're really knocking out longs and shorts, and it looks really bullish. But when you do this, there's nothing going on. It's nothing. It still looks like shit. It's still downtrending. I mean, it looks awful. It's all about it's all about perspective, guys. It's all how sometimes you need to zoom out to really understand the bigger picture. If you're getting too excited, that means that you're too low, you're too close to the chart, meaning your time frames are not set correctly. You're looking at the 5 minute, you're looking at the 15 minute. You shouldn't be looking at these unless you're a professional scalper. If you're a professional scalper, that's where you look. The 1 minute, the 5 minute, the 15 minute, the 10 seconds for a leading indicator. That's what we do as scalping. If the majority of people shouldn't be looking anything lower than the 4 hour. 4 hour to weekly is what they should be focused on to get the really good picture. This is what swing traders and investors are looking at, no less than the 12 hour. As a matter of fact, the daily and weekly will give you a much better outlook at what you're trying to accomplish if you're an investor or a swing trader. So just make sure, guys, if you're getting too excited, too emotional, you're probably next time you get excited, look at the time frame you're looking at, and hopefully you'll think of me. You're like, oh shit, I'm looking at the 1 hour. BC said not to look at the 1 hour if I'm too excited. Does it look just as good on the 12 hour? And if it does, then great. Let's get excited together. That's awesome. But a lot of the times, that's not the case. A lot of the times, the 1 hour is going to show you all the great stuff that really is not. It's just a liquidation event going on here. They're just knocking down all the high leverages, guys. Yeah. We talked about that, me and Marta. I hope you guys tune in to all of our shows, because we try to give you as much information as possible. We try to give you little cheat codes. What I mean by that is, if you guys are on a leverage long or short, say you're in a liquid a leverage 100x short, the market only needs 0.46% to liquidate you. 0.46%. So imagine this candle right here, the way it knocked this just knocked down all the high longs, and when it pushed up here, it knocked down all the high leverage shorts. It basically flushes them out, and then look right back to where we were.
Straight back.
And that's the only reason they did this, guys. This wasn't crypto Twitter magically buying and then magically selling. It didn't happen like that. This is all liquidity driven. And this is something you have to be careful of, because this is what you see in a leverage market, which is why we don't recommend, if you're not a professional trader and understand risk management, understand how liquidity driven markets work, do not leverage trade. You have plenty of time to make money. You don't need to leverage trade to make money. You need to zoom out, understand trading, understand where you buy, and understand where you sell, and that's it. Understand those simple concepts, and you never need to touch leverage trading. Awesome. That's all I got for today, Marta.
Awesome. Absolutely a pleasure as always. Thank you very, very much. The chat was very lively today. I didn't read everything, guys, out today, but we're just tight on time. Hopefully we can do this again before Christmas. I'm say maybe we can do it even next week if we have time, BC.
Yeah. I'm good. You let me know. I'm here for you guys. Definitely. Whenever you need.
Because I think, you know, all the information guys are getting here is superb. It's just to help you. We will do everything what we can in our power to answer your questions. Great offer from BC here. I'm going to throw that link in my Telegram. I'm going to throw it in after the stream here in the description as well. Remind me, please. And also, I'll just throw a tweet for everybody who would love to get a one-on-one session with Bleeding Crypto. He's giving you a link. You sign up to, what is it, Bybit? No.
Yeah, BINGX.
BINGX. So this is brilliant. I would definitely go for it, guys. It won't cost you anything really. And it's
and for the first 100 people, they have given me $100 for the first 100 users to sign up with my referral link. They'll give them $100 trading money.
And what's the minimum? What's the minimum that they need to deposit?
They don't need to. There's no minimum to get those $100. So awesome. Basically, the trading money is if you make anything above what you make, you will get. You get to keep the profits.
Brilliant.
You can't withdraw the 100 that they give you, but you can make profits on top of that, and then you get to keep them. But there are very, very good incentives for deposits. They give you extra money and a lot of extra different levels depending on how much you deposit. So all the stuff is on that. When you click on the referral link, Brilliant. It'll give you all the breakdown of all the different offers that they have. And you know they are also working on the Merkle tree for the proof of reserves. They're working on that as well.
That's amazing.
So this way, way they want to bring confidence. They understand that we've lost a lot of confidence in exchanges, and rightfully so. Yeah. So they, along with Binance, are also trying to bring that confidence back into the market, and they feel like following Binance's example of showing those proof of reserves is the first step to regaining some of the confidence that was lost in the market. So they're on a campaign. They want to give you guys. They want to incentivize you guys to join them. They're going to give you some free money. They're going to help. I can help you trade. I'll help you at least understand how to look at some levels so you can trade on your own, and you can see if you can turn that 100 into 200, turn it to 300, and you get to keep all that profit for yourself.
Amazing.
Robert Hughes, I'm looking at your questions right now. Very excellent questions. Yeah. I want to cover those. Send me a DM on Twitter. I would love to talk to you about one of your questions. Do you think the macroeconomics are priced in yet? Or is that what takes us down to 8 to 11,000? That's a big question. I would love to answer that for you. I don't have the time right now. Send me a DM and let's chat, man. I love chatting about markets, so I have no problem doing that.
We can try and cover it after you speak to Robert. We can try and pick it up maybe next time we're live again. So again, guys, absolute pleasure. Thank you very much, and thanks for all your comments and your feedback. We'll see you soon.
Bye, guys.
Bye.